please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The management of Jain Irrigation, Anil Jain, MD of the company, is with us now. Anil, good morning. Interesting that the revenue was up 10%, but there was a bit of a hit on the profit, of course. But your Q3 outlook, Q3 is seasonally strong. I think, do you think Q3 would be, would sort of compensate the weakness in Q2? And also, if you could tell us for second half as a whole, what kind of numbers you can post?
Sure. Again, thank you. Now, if you really look at the numbers, our revenue went up, as well as EBITDA has gone up, from 190 to about 219. Where you see reduction at the PAT is due to higher depreciation and some tax issues. But I think when you look at the overall year, that issue will get compensated. Coming to H2, overall, we feel that it is going to be very strong because our order book is very strong. And based on that, when we had given a target for the whole year of about 20% revenue growth. In the first half, we have achieved about 40% of that, which is traditionally, has been historically, that is the trend for our company, that 40% we do in first half and 60% in second half. So I think we are on track to maintain that 20% growth in revenue. And we have talked about 20 to 25% growth at EBITDA level. And to ensure that will happen now in the second half, our third quarter, fourth quarter, they need to grow in terms of revenue 25-30% or more. And we have enough orders in hand across different business segments we have, where we feel fairly confident that we will deliver.
Actually, it's not 25-30, it's 35%, Anil, for revenue and 40% for EBITDA. Doable?
Yeah, that's doable, because when we talked about the order book we never had such a strong order book in hand. Almost at India level, order book is close to 2,200 crore. If you look at global level, console, order book is close to 3,900 crore. Those orders in place now, on one hand, and even in the second quarter, some of this we could have done, but there was this GST disruption, right? Even on the orders, the governments were not ready yet to adjust to the new regime and whatnot. But all of that is getting settled now. That's how we will definitely see growth in Q3 as well as Q4.
Mr. Jain, let's talk about the agro processing business as well, because there in the previous quarter, it's been top line slightly sluggish, just about 2% growth. Of course, the margins are looking much better there. What is the outlook for that business in the second half, and what are the plans? Are you looking at a separate listing? If so, by when?
Overall outlook is quite good. In fact, the business out of India on the food processing in this particular quarter grew almost 17%. So that's a positive growth compared to the first quarter, where it didn't do that well. The orders, again, we have in hand about 450-500 crores out of India alone, so which would allow us to have a very strong second half in that business. Also, apart from the business we have today, our spice processing plant is starting end of this month. That will start adding to the revenue from the fourth quarter onwards. And we have also orange juice processing business coming up next year. So when you look at all of these new additions plus the existing business orders we have, we feel we are in good position for very good growth in that particular business. We are also launching the the retail brand Farm Fresh, which would be far more prominent and I would say a national level launch next fiscal year. Now, when you add up all of that and looking at the very good future it has, we have also, the board on Friday took a call and said that we should list this business, and I believe it should happen sometimes next fiscal year revenue, because India alone should do about close to 1,000 crores domestic and exports, and about 800 crores will come from our overseas entities. But as we get into the business, right, and we are talking of IPO next fiscal year, 19 business is expected to grow much more because of addition of new business lines which we have. So when we are talking about FY19, one can add significantly higher revenue than the 1,800 crores we are expected to do in the current year.
Okay, so but let me just get that number clear. So 1,800 crores of revenue for the food business in just FY18, running at what sort of a margin? Because the margin is, I think, 12% at the end of second quarter.
I think, and there is some seasonality there. Our average margin for the whole year should be closer to about 15% at EBITDA level.
Okay. A word on the debt as well, Anil. What's the outlook on that? Are you comfortable with the debt levels, or do you plan to cut that down?
We plan to get it down. Our debt does go up in the first half and comes down in second half. From the current level of debt which we have, which I think is a peak, you would expect that between now and March, our debt should come down close to about 600 crore plus. And we are trying to maintain, our debt equity is already less than 1, but we are trying to also reach debt to EBITDA level of close to 3 by March 18 and further improve that, as we move into March 19 and 20.
Okay,